Are you interested in learning how to be your own bank? We say you can be a customer of the bank or you can be the bank. So I just want to recognize the sponsor of this show, my firm, Practical Wealth Solutions. And so we help people set up privatized banking systems so that we can get interest moving towards you rather than away from you. So if you want to set up your infinite banking policy up properly, right? We use properly structured dividend paying whole life as a place to store cash. And you want access to a coach that will show you how to integrate this into your investing, to expand your business, to protect your capital from market downturns, taxes, predators and creditors. What I want to do is I want you to go to practicalwealthsolutions.net. Go to the bottom. We're going to send you a little mini course on banking, and then you can reach out to us. Or, if you already know you want to do it, you can go right to the set up a strategy session with one of the coaches, and we will get you on the path to be in the bank. All right, so this short episode will be called IBC Points to Consider. So one of the things so when I talk to people, I learned this from a friend of mine, thanks Richard Canfield, is when you're reading Becoming Your Own Banker. So first of all, one of the things that we teach our clients is if you're going to learn about this, people said I'm researching it and you're going to TikTok, you have to go to the source, right? So if you're talking to somebody, I don't care if they're in insurance, and within their first 5 minutes, you call them up and say you want whole life, and they don't literally beat you over the head with the book. They don't know how to do infinite banking. All right. So, and it is a concept, not it is a concept, right? And so what happens is you got to get the concept. So what I always start people, if you get the book, so first thing, order the book, Become Your Own Banker. All right. And I start with the last page. So I'm gonna show you how to read the book properly. So points to consider is when you look at Nelson's book, he says, look, there are only two sources of income at work. I'm reading from the book: people at work and money at work. In the typical American family, the first half of this century, the father worked outside the home, the mother managed the home, nurtured the family, instilled spiritual values as the children matured. Now it is widely accepted that a family can't make it without the spouses working outside the home. It takes two incomes just to make ends meet. Ends don't meet. That's why they're ends. All right. But in the modern family, is it possible that the modern family has no money at work? All right. And so that's point one. There's only two sources of money. Two, if you knew at passive income time, what Nelson called retirement, which he didn't really believe in, that you'd be getting back everything you paid into a system tax-free, would you object to putting more money into it? Three, if you get paid to work, you put all your money into someone else's bank and then write checks from the account to buy the things in life. So someone else's bank get all your money. See, this is not about rate. People ask me, what's the interest rate? It's not about rates of return. Okay. It's about who controls the banking function in your life. And so if you owned a banking system, wouldn't you want to run all your business through your own bank? Like if you own Wells Fargo, would you bank at PNC? Okay. So this is a concept, not talking about you go chartering your bank, and it will take the average person. So this is what people have these short term, how much can I borrow? I'm going to put this in. How much do I borrow? The Nelson says you got to think long range. And close the door. And you got to think long range. And the average person will take about 20 years to reach this level. And then if this message is taught to succeeding generations, then a perpetual banking system can be achieved. Okay. And, he says before the government creates a problem, onerous taxation, and turns around and grants you an exception to the problem that they created, aren't you a little bit suspicious that you're being manipulated? So that's what he thinks about qualified plans. 5. Well, this is the point that I want you to get. Wealth has to reside somewhere. So where would you like to have it reside? So that means Nelson's other book is called Building Your Warehouse to Wealth. So your wealth, your money needs to be stored somewhere. See, infinite banking is a storage system. People will call me and say, I want to create wealth with life insurance. That's you create wealth from investing, but investing is about becoming something, not about buying something. So you got to stop thinking short range. Remember the 3 rules of investing: invest in what you know, or invest in knowing, invest in what you control. Don't chase returns. Okay. And so where do you store your cash is a better question, right? So where would you prefer to have it reside? Real estate as a place to store real estate's an investment. It's not a good place to store cash. Then look around and see what happens when one needs liquidity. Real estate is very much a frozen asset because you have to qualify to collateralize your real estate, right? All infinite banking is collateralizing an asset, but you don't have all the restrictions. But you have to capitalize it first. You got to get some money in there. Okay, the stock market. In the book, he says, try the recommended reading from those interested in the stock market on page 91 of the book. Until you have done so, are you qualified to make an intelligent decision about such action? One of the things I always ask our clients is, on a scale of 1 to 10, rank your knowledge about the stock market. So I have people tell me 6 or 7. I was like, really? Who manages the fund you're in? You don't know anything about the stock market. And most of you, there are traders out there, and I like that. But just to buy and hold, and the market's so manipulated, it's hard to know because you can't really get any honest pricing. Okay. And you can do that, but again, you got to become an investor. Okay. So real estate, the stock market, or would you want to store it in a free contract with other free persons, life insurance? From this base of financial operation, you can do any of the other things in life that you desire. 6, right? You finance everything you buy. You either pay interest to someone else or you give up interest you could have earned elsewhere. There are no exceptions. And 7, point to consider is that your need for finance during your lifetime exceeds your need for life insurance protection. So if you solve for your need through finance through life insurance cash values, you'll end up with so much insurance you can't get it past the underwriters because you'll just have too much. It'll take, if you solve for your need for financing, that's why Nelson had 47 policies. He had he was uninsurable because he had a heart attack at 52, but basically he was solving for his need for financing. So you got to stop thinking about life insurance. If you call me, don't ask me how much does it cost. What are the caps? No, somebody asked me, what are the caps? What's the, it's not that. Okay. How much can you save? What's your need for financing? What do you want to do? Okay. You need a down payment for a house. You're trying to finance a car, but not even short term like that. Because if you read the book, Nelson capitalizes every policy anywhere from 4 to 7 years. Now, it doesn't take 4 to 7 years to be able to access the money. You can get it within a week, but you need to be patient enough to whip what he called Parkinson's law. Parkinson's law says what? Expenses rise to meet income. So I have new people come into money and it's like burning a hole in their pocket. They can't wait to spend it. Even if it's investors, I have people get money and they just stay all this stuff, projects, stuff I want to do around the house, the trip we want to go on, a car. And, you can't whip Parkinson's law. So you get money and you automatically give it away. And so you got to focus on your need for finances. You got to think long range. Don't be afraid to capitalize. So right here are the rules of bank. So anyway, you start there. See, so if you start with, this is on page 85 of the book, points to consider. So now you know the end. And now you go back to the beginning so you can put the book in proper context. And just let me end with this. This is from the front of the book, right? And so this is my book. If y'all are watching the video, see my book here? It's so jacked up. I had to get it bound and rebound. It's autographed by Nelson. So, you know, I was seeing all these guys, you know, it's highlighted and annotated and notes in the margins. You know, you have to study this book. And I'm working my way through Nelson's bibliography. But one of the things is I want to point out to you, where's it at? Nelson says this book is not, here we go, introduction. This book is not about investments of any kind. It is about how one finances the things of life, which can certainly include investments. It's not about rates of return. As time goes by, rates are up and interest rates are down, but the process of banking goes on no matter what is happening. It is a well-known fact that banks make more money during times of low interest than high. And see, so that's what you got to do. You know, it's not a get-rich-quick plan. It requires long-term planning. His thought is that you plan as if you're going to live forever and live as if you're going to die today. It appears to be a good thought. So anyway, that's a little short thought on IBC as you start to study the book, and you got to get your mind right, folks. It's not about life insurance. It's all about how you think. Banking is a process, is a system of money management, and the product of life insurance helps you facilitate the process of banking. So I hope that helps somebody out here. Just want to do a little short message. Have a great day.